Hello world, welcome to Farm the Market. On the Stock Trading Journal series, I usually share individual trades where I analyze the parameters and I share with you what I learned from the trades. For this video, I thought it would be interesting to share my post-trade analysis for the past 4 months. It's been a rough year, 2022, and I think more than ever it's important to review our numbers, be aware of what we're doing right, what we're doing wrong, and hopefully this exercise helps me and of course helps you. And you might find interesting some of the numbers I track and how I use them to hopefully improve my trading. Also, I'm trying a more casual format this time. I'm not using a script, so it's pretty much off the cuff. So, I'm just chilling here with my cup of coffee, and I apologize in advance for all the mispronunciations and, whenever I get stuck for a moment, but please bear with me and, well, let's get started. So, as I mentioned, this is my review for from January to April of 2022. And as I have mentioned in previous videos, it's very important that you keep a journal, a blotter, a record, whatever you want to call it. But you have to be aware of what you're doing and you have to measure it, because that's the only way you'll be able to improve. So in this case, as you can see here, these are very simple calculations, and this is nothing fancy. You can find this information about these numbers in different books, tutorials, videos, etc. It's a very basic approach to trading. In this case, I'm reviewing a very vanilla portfolio where I do not trade options, although I really like options. This is just a vanilla portfolio where I pretty much go long the market, mainly US stocks or ETFs. And I'm usually looking for breakouts or pullbacks, and it's basically a trend following strategy. Whenever the market is trending in either direction, although I mostly trade long, I try to follow that. Everything is calculated using an Excel spreadsheet. As I said, nothing fancy. And well, first of all, I want to talk about the win percentage or the batting average or whatever you want to call it. I think this number is overrated. What I mean by that is sometimes, especially now and then, I come across some videos on YouTube that talk about how to have a 90% winning percentage on your trades or 80% or, very high numbers. And the truth is, if you're getting those numbers, for example, even this is not the case, you can trade options and sell way out of the money options, with very small deltas. And on the long run, you will have a very high winning percentage. But the problem is your gains will be very small. And whenever you get hit, the hits will be very large. So the winning percentage is not that important. For this strategy in particular, as long as I remain above 40%, I wouldn't say I'm happy, but I would love to be closer to 50%, but it works out as long as I'm above 40%. Actually, for the past 2 years, my average has been around 46%, so I'm a little below that right now, but well, no big deal. The numbers that is really important is the ratio, the risk-reward ratio or reward-risk ratio, whatever you want to call it. The thing is, it's a relationship between how much you gain and how much you lost in average. And in this case, I am in trouble because this number should be above 2. This is not something I chose arbitrarily. This is math. For my average batting, given my average winning rate, I need to be with a ratio above 2. So in this case, with losses close to 4% and wins close to 6%, I'm not even close to 2. So and that's basically the main reason why I haven't done pretty much any money this year. So this is the number I have to focus on. So there are two ways to improve this number. You can lower your losses or increase your gains. It's that simple. My losses are already pretty tight. I mean, under 4% average loss, I think, at least for my strategy, I think it's really good. So that's not a big deal. But my wins are relatively small. So that's where there's more potential to improve. And well, of course, as I mentioned, it hasn't been a good year. So far, the return is under 2%. So basically, I'm breaking even. Nothing to brag about. Considering the market, how it's been, of course, it's relative because we all have our own journey in the market. The market can be doing great and your portfolio can be going down and vice versa. So breaking even, it's good or bad? Well, I don't like it. I like to be up. So definitely I have to improve some things. In this chart, we can see the open notional. This is not the equity curve. This is just the percentage of the portfolio that has been invested at a given time. So as you can see, this tells me a lot, and I like to track this constantly because I haven't been able to really expose myself to the market. Maybe for the best this year, given the circumstances, but there has been no traction. So even though I have a bigger wins than losses, I still haven't been able to make more gains because I haven't had the confidence to really expose myself to the market. As you can see, I have never been 100% invested. Only during a couple of days I have been between 70 and 90%, and on average I have been only about a third. So that tells me that the market hasn't been cooperating, so to speak, or that I haven't been able to find, better stocks that are actually trending and are actually giving me the chance to stay there for a longer period of time. So far in 2022, my average win, for example, I think it's almost 8 days. That's calendar days. And my average loss, I've been in the stock for about 6 days. So as you can see, not very long, not a very long period of time. And well, here I wanted to, just to show how whenever I try to, because I like to scale in, I don't just go right in, but whenever I try to scale up really, really close to the top, I get stopped out really fast. So I have to unwind or to close the positions completely, and therefore that's why no traction has been found in these markets. And this green line just represents, that horrible green line represents what I would like to see, where you scale into the market a little bit, as things start to work and you have a cushion, you can add more notional, and eventually when things are working the best, you have the most notional open, and that's when the returns really start to show. Here's a breakdown per month, and well, this is just to give me an idea of how things have been pretty much during each month. And as you can see, nothing fancy. Clearly April was the worst month, but let's go in order. January, going back to the chart, I was really pretty much with no exposure at all. So the return was minimal, even though the average win was above the average loss. Well, the ratios have always been above 1, because below 1 is just disaster. So every month I've been above 1, and for January the 50% winning rate, that's good. But again, it was a small notional, so the return was pretty much nothing. Then on February, I had a very good winning rate, but as I mentioned before, I don't really care about that because this is just a fluke. This was just pure luck. I cannot rely on this number. I mean, it's great when they show up, but the problem is that the ratio was still low and even going down from January. So even the return was better because I had a more notional open, and the winning rate helped a little bit. the ratio was going down. So this was a warning already. This was showing me that I wasn't trading that good. Then March came along, and March was a pretty good month, given the circumstances. The winning rate was about 40. The average win really increased, and that of course helped the ratio that got closer to the number 2 that we discussed earlier. So this was the best month, and the return, well, although nothing spectacular, it improved also. Then April came along, and this was a terrible month. However you wanna slice it, I mean, 28% winning rate, the ratio barely above 1, and of course the return was negative. I mean, you cannot have a ratio of 1 and a batting average below 1/3 and expect to make money. I mean, you're pretty much, if I do this over and over and over and over, I will be doomed. So this has no place. This has to be adjusted, and of course, as we saw in the chart, the notional exposure was reduced. Here you can see by month. In March, things were going well, so even though I got stopped out, I went back into the market as the month was on the second half of the month. But for April, once I had the first run, I tried again with lesser amount, but it just didn't work. And actually, these last couple of weeks have been awful. I mean, I have been reducing my exposure, and I just keep getting kicked out. I mean, it has been brutal. So what you do in this case, and what I have been doing, and I guess that will be a silver lining, is I have been disciplined. If things are not working, you reduce your notional exposure. You do not increase it. You just keep going down, 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 down. And until things start working, there's no point to increase the notional. I closed the month actually with no positions. So that's what April had to show us. Okay, going back to the basic numbers, so to speak, I wanted to emphasize in this case the importance of avoiding big losses, because I had a particularly big loss of almost 25%. And here's my return distribution for every trade. And here on the left side, you can see that loss I was talking about. And plain and simple, that was a very stupid trade. It was on the RSX ETF. It's the Russian ETF. I have an acquaintance that it's well informed in geopolitical stuff, and when the war was about to break out, he told me, his expectation was that it will be similar to what happened in Georgia about 15 years ago, where Russia just went in, and it was a swift operation. It was fast. And he expected that the Russian troops will just stay, close to the border and just in the separatist regions. But as we have seen, that wasn't the case. It was way more aggressive. And of course, Ukraine, once you go past that region, Ukraine is a huge country, so it has taken too much time. And well, of course, the humanitarian part is way more important than any stupid trade I could do. So hopefully that gets resolved soon. But the message here is I tried to catch a falling knife, basing my decision in something other than what the market was telling me. The RSX was plummeting, and just because I thought it will be a very short period of time, I assumed there will be a bounce back very shortly, and well, of course it didn't. It didn't happen, and I took a big loss. And that was for March. So I wanted to show you that single trade. If I compare the numbers for March with the trade on RSX and without the trade on RSX, you can see that the numbers change quite a bit, especially in the ratio. Because you can see the average win and average loss, and you might think, well, it improved a little bit, and the winning percentage also improved a little bit. But you can see the difference in the ratio and the return. And once you go past 2, that's the number I was talking about, the returns increase. So this was quite a difference. So, you can have a very good month and a couple of stupid trades can just destroy what you have done. In this case, it wasn't enough to eat up all the returns, but March could have been a way better month if I had avoided a trade that I just got carried away. There was no point on doing that trade. The returns distribution is also useful because this should be skewed to the right. And obviously, since things aren't working that well, I'm skewed to the left. So that's not really good. I need to shift this box, these returns should be moving to the right, or at least to the center and then to the right, Shifting to the right will help the overall performance. And well, here I can tell that leaving aside this huge loss, I was pretty much, disciplined. Nothing went past the 11% mark. So that's something that I'm happy with. Not the number or the number of occurrences, but at least the magnitude. Taking out this trade, at least I didn't took any big losses. So talking about the losses, of course, if I want to improve that or I want to manage that better, you have to look into the numbers. And while I was reviewing my numbers, I identified that I'm trying to find the right word. Not an insignificant number of trades, around 15% of my losers at some point were above my average win. Here's something important. Sometimes we'll lose perspective because I will love my wins to be 10, 15, 20%. But right now, I am not able to get that. And either the market is not giving it, or I'm not finding it, or a combination of both. But since it's not working, I have to manage my expectations. So if I'm being able to get close to 6% returns in the market, as soon as I see that a position is up close to that 6%, I should be doing something differently. Here I use two general examples. Of course, let's say it was some sort of a breakout or some sort of a pullback. And usually what has been happening is that I buy, I enter the trade, it goes up. Well, at least for this 15% of trades that I identified, it goes up, and eventually I have a pretty decent gain considering what I've been able to produce. And, of course, that's just the threshold. Most of these gains went past 6%, but then they came crashing back very fast. So the stop loss was eventually triggered, and what I want, oh my God, sorry. What was once a winning trade with a pretty decent gain, now is a loss. So I have to avoid that. And even though it only happened in 50% of my losers, if I can reduce that or mitigate that, that will be a step forward. So this is one of the main takeaways that I have from this review. So what I'm planning to do is whenever I hit that threshold or I'm close, actually I think I'm going to use like 5% or something like that. But whenever I have a decent gain, at least I'm going to move my stop loss to my break-even point. So this winning trade, or at least mark-to-market or paper gains or whatever, this trade will not become a loss unless it gaps down. But as long as it doesn't gap down, I will have a break-even or winning trade. And I think that will be a step forward on helping me out to improve my numbers. Another important takeaway is that I have to be very patient. As I mentioned earlier, things are not working, and I have to be using very small size right now until I see some traction. Each day that passes and your portfolio is flat or goes down, you get a little more anxious. I get more anxious. Everyone does, I guess. And you want to do more. You want to do something else. And the thing is, that's the kind of times when you usually get into trouble. Well, at least for me. So here I'm going to be patient. And May, I think it will likely look like January in terms of the notional amount, you know. I will try to take it very slow, unless something really moves very rapidly in my favor and gives me a cushion to move up faster. But unless that happens, I think that's what I'm going to do. Another takeaway is, of course, to be aware of what's going on in the general market. As I mentioned, this portfolio mainly I trade US stocks, and I just did a quick screen for a couple of relevant metrics that gives us a good sense of the general breadth of the market. And as of May the 6th, only 20% of the stocks are above their 200-day moving average, and less than 1% are making new 52-week highs. And actually, one fourth, almost 25%, are making new 52-week lows. So, in a nutshell, the market is horrible. I mean, if you are long the market, if you are trying to find setups that work with a bullish market, the general market is not on your side right now. So what does this tells me? Well, I have to look for more shorting opportunities. So far this year, 84% of my trades have been long and only 16% have been short. So I have to focus more on shorting stocks that have a good setup, because even if they work out, they break down really fast whenever I find a long setup. So that's another takeaway from my review. And also, I have to be more demanding, sort of speak, of the patterns that I find. They have to be really setting up perfectly, in my opinion, before I go into a trade. So you also have to be more picky, sort of speak. And well, finally, I wanted to share with you. I stumbled upon this website a few weeks ago. It's called Kobe. I don't know how to pronounce it, but it's a website that pretty much allows you to record your trades, and they do all the calculations and keep track and make it public, and they even I haven't looked into this, to be honest, but I think it's in some sort of blockchain, so it's available to anyone to check, and it will be so there's certainty that nobody alters information, so it's sort of a way to make a public portfolio more reliable, so to speak. I found it a couple of weeks ago, so it doesn't have the information for the whole year. But well, I've been playing a little bit with it, and every time I make changes in my portfolio, I also input them in this website. So I thought it would be kind of fun, because that might be a way that you can follow what I am doing, keeping track of my portfolio. And of course, this doesn't mean that I endorse this website. And of course, they do not sponsor me. I have no relationship with them whatsoever. I just thought it was a neat idea, to share the information, and because I don't do videos that often, so at least this way you can see what I'm doing, and I will be using this portfolio that I talked about during this video. And also, even if you know of a better website or a similar website where people can post their trades and can keep track of them, so people can look at them, and it's a reliable way to share the information, knowing that once it's booked and it can't be edited. Please let me know. And of course, also, if you have any comments or questions or suggestions, regarding what I talked about in this video, please also share them in the comments below. And well, that's it. Remember all the good stuff. Like, what is this called? The notifications. Turn on the notifications. Also subscribe, please. And also let me know if this format wasn't too annoying. I mean, As you can tell, English isn't my first language, so I tried to make I tried to make the best of it, and I hope that you can understand it. And well, this time I had no script, so many mistakes along the way, but let me know if if it works out for you, and hopefully the message got through. That's the important thing. Well, thanks for your time, and until next time.